Okay guys, good morning and welcome to our next class. So our today's class will be touching on candlestick pattern and market structure. So in the candlestick pattern, we'll be talking about all the candlestick you get to see, the main candlesticks you will get to see, and also the candlesticks you will get to see for you to get a clearer confirmation towards the market. So let's dive in. So the first candlestick, I'll show these candlesticks in pictures, then I'll come to the forex market and identify few of them, so that when you see them you know probably the next move and also how the market is going to react. So these are the things. So first of all, we'll dive in with the bullish engulfing pattern. That's the bullish engulfing candlestick. See, this is an image showing a red and green candle, showing that this green candle is bigger than the previous candle, which is the red one. So the bullish engulfing candlestick, simple, just it means the reversal pattern, telling you that the buyers are momentarily in control. You understand? Telling you that the buyers are momentarily in control of the market. They are they have high significant impact in the market. The strength here is bigger than the other strength, the previous strength. They are showing you the open and the close of the candle, which is when the candle appears in the market. It's when the candle appears in the market, it is shown. So here the green candle is bigger than the red candle. That is bullish engulfing. It must be like this for you to be bullish engulfing. When you are in the market, when you see a candle like this, shows that the green candle is bigger than this and there is a high probability of the market to continue going up. That's to continue buying. So that is just it, and the bullish engulfing pattern. So the next one, we'll be talking about the momentum candle. The momentum candle, I think this is not the momentum candle. Okay, yeah, this is the momentum candle. They have a high momentum, low momentum, medium momentum, but the main thing you need to understand is the momentum candle is when the first candle is bigger than the two previous candle. When the next candle that appears in the market, let me use this one. When the next candle that appears in the market, let me put a color. I'm using this one that I just circled now. When the next candle that appears in the market, that is this one here, is bigger than these two. When the next candle here is bigger than these two. So this one that I just circled now, this one is bigger than these two red one. It has a full body which closed the two red one. This is a high momentum, showing you that the buyers are taking control. You know, I'm taking this step by step so that you get to understand what all the candlesticks signifies. So candlestick pattern is just the patterns you get to see in the forex market for you to be able to take trades, understand how the market flows, and also how you are going to be able to make money via the market. So this is just how it is. This is the momentum candle, nothing much, nothing less, showing you how to be able to identify the momentum candle when you are in the forex market. So we also have multiple candlesticks. That one is not a bad thing. That one is not hard. It's just your understanding. The multiple candlestick is when you see 3 or more candlesticks. It's not here. I don't have a picture of it, but I'm going to show you the candlestick in the forex charts. When you have 3 or more candlesticks going to the same going towards the same direction, I think that's what it is, going to the same direction. When you have 3 or more candlesticks going towards the same direction, that is what a multiple candlestick pattern shows, which signifies it has a weak direction. but once it moves up towards any direction, it keeps on moving towards that way. So that is just it for the multiple candlestick. So let's go to the hammer. The hammer candlestick. This particular one now is the bullish reversal candlestick pattern that forms at the conclusion of a downtrend. Probably when the market is moving down and the market is moving towards the down aspect, and you see something like this, then you see the next one, you see a candlestick like this, then the next candlestick you see probably will be green, like this. So here now, let me circle this particular one, maybe with blue. The one I circled with blue is the hammer. This one now is the hammer. It shows a bullish reversal. From the words they wrote here now, it shows a bullish reversal. So this is just an example. When the market is going down, see, the market has been going down, it came to this particular place and range and probably formed a hammer candle, which what will follow next is probably a full green candle, signaling that the buyers are now in control. That is what it means. So it's just very easy to identify. So that is just it for the hammer. So let's talk about the shooting star. Shooting star is just like hammer, but it is in the opposite direction. So the market has been going up, just like this. Same thing we talked about here. The market has been going up here, and you saw a shooting star. Shooting star is just the opposite of the hammer. So a shooting star this signals that the buyers are no more in control. Sellers are already taking over. But for you to be able to confirm this particular thing, you wait for the next candle. The next candle is the red candle here. Wait for the next candle, and once it signifies, you can actually come and take your sell from here. Your stop loss will be here. So it depends, and you sell down and make your money. So this is just how it is. It's just your understanding. And there are many more candlesticks, but there are major candlesticks you'll get to know. These are just the major ones you'll get to know. We have doji candlestick. I'm going to show you that particular one in the chart. Doji candlestick. Okay, so let me show you that particular one in the forex chart. I will show you all the candlesticks that I talked about now. Let's take it one step at a time. Okay, let me zoom in. So here now, I'm going to be circling it red. Okay, so this particular one that I just circled now is a doji candlestick. A doji candlestick signifies where there is a full, like there is a thin body. There is a thin body with wicks. The wicks here, the wicks is this particular line you are seeing at the end. This particular line shows that the market have moved up. It has already moved down, but it stopped at the middle. That's the wick. That's what we call wick in the candlestick. The wick part, the body is the full, either the full red body or the full green body. That is what it's called body. But when you say the candle have a full body, is when the candle created a full body. But the wicks is the line you see beside the body, the down part or the upper part of the body. That's the wick. So this doji candle signifies a continuation pattern. It can continue an uptrend or a downtrend, or also continue a ranging market. It depends. That's the reason why you need to wait for a confirmation before you either take a buy or a sell. So that is just it. So let's talk about the bullish engulfing pattern. Here we also have a bullish engulfing pattern here. So this is a bullish engulfing pattern. Let me circle it. This particular one, these two candles that I just circled now, this green candle is bigger, like is 3x bigger than the previous green candle. You can also use this as a bullish engulfing pattern. You can also use it as a momentum candle. You can also use it for a lot of things. It's just almost the same thing. As far as it is 2s bigger than the previous candle or 3s bigger than the previous candle, that we keep on going. You see, after this particular thing, you still saw a green candle leading towards the up part. You're seeing it. So this is just how it is. Let's look for okay, in here now, let me also, the multiple candlesticks that I talked about, that was a little bit confusing because I did not have anything to show you on it. Let me show you here now. There's a multiple candlestick pattern. This multiple candlestick pattern here is what signifies a ranging market. So what you will do when you see something like this is just for you to wait and see the reaction towards the market. Probably the next candle will tell you what to do next and also how to do it. So this is a ranging market which has a multiple candlestick under it with the same direction, because here they are not breaking the upper part, they are not breaking the lower part, but once it breaks, your work here as a trader is just to map out. When you map out, once it breaks the upper part or the lower part, you take a buy or you take a sell. So but this goes with confirmations. That's the reason why you need confirmations as a trader, for you to be able to get the main thing you need from the market. So that is it for the multiple candlestick. So let me show you more. We're taking it step by step. So all these candlesticks you are seeing here, all of them have meanings. They have meanings to themselves. That's the reason why you need to understand them before you move into how you will be able to take trades with them. So I think I've said the main ones. So let's keep on moving. So with this, I've already talked about the candlestick pattern. I already told you that the candlestick pattern is just the way market moves. It's just the way candlesticks are being shown, the different kind of candlesticks you see when you are in the forex market. That's just what the candlestick pattern is. So in the next part, what we'll be talking about is the market structure, which is the overall market move of the market. We're talking about market structure, which is the overall move of the market. So market structure is just like the way markets move. So let's in this part of market structure, we'll be talking about the uptrend, the downtrend, and the ranging market. Let's move into it. So let me look for a good explanation. Okay, this is a full market right now. This is a market right now. So we have a downtrend. Let me write it down. You have a downtrend, an uptrend, ranging. So this is the only three ways the market can move. See, the three ways that I just listed here is the only way the market can actually move. It can actually move in the uptrend, the downtrend, or the ranging market. So here now, let me map out something to show you what I'm talking about. You see, from here is a downtrend, because why? The market is moving down. From here is an uptrend. From here is an uptrend. Let me bring it very well closer a little bit. Let's do it again. From here is a downtrend. From here is a ranging market. Not like a ranging market you can actually take trade or anything. A ranging market can also signify that the market is in the same direction. That is what it is. It is not moving up, it is not moving down, it's still stagnant, which trades can actually be difficult for you to be able to place at that particular range. And we have an uptrend here. It's just like W or something. But here, when the market is moving down, we call it a downtrend. When the market is in the same position, we call it a ranging market. And when the market is moving, pushing, like seriously pushing up, we call it an uptrend. That is just it. A downtrend is signifying that buyers are sellers are in control. That is what a downtrend is. An uptrend signifying that the buyers are in control. But the ranging market are signifying that it's just signifying that the buyers and the sellers are dragging the market, which has no particular movement yet. That is the reason why there is what we call confirmation. You confirm before you place a trade. That is just it. This is just a market structure is just the way markets move. It's just the way markets move. It moves up, it moves down. There is what we call an overall uptrend. You can actually check whether a BTC trade is in an overall downtrend or overall uptrend. But here we have that BTC trade here, because today is 24 September 2025. So if you check, the BTC trade is at 112,600, which is signifying that the BTC trade is in an uptrend, because the previous was 124. Still in an uptrend, so we keep on moving, because this year we are expecting BTC to hit 170 plus probably before the year runs out. So this is just how it is. You get to see the movement of the market. Inside the overall uptrend, we have downtrend, ranging market. You get to see all these things, because I can't just say the market is overall uptrend, therefore you think that all of them is going to be going up at once. No, market will still pull back, come up, do a lot of things. So this is just how it is. It's just your understanding. So with this, I get to understand that few people understand this particular aspect of the lesson, and I'm glad that you people do. If you have any question concerning the candlestick pattern or the market structure, wherever you are having confusion at, do well to let me know. So thank you guys. We'll see you on the next lesson.